If you told me a year ago that silver would surge 76% in 2025, I wouldn't have believed you. But here we are, silver just broke $52 per ounce, smashing records that stood for decades. And now, every investor is asking the same question. Is it too late to get in, or is it just the beginning? What's up everyone, welcome back to the channel. Today we're going to dive deep into the silver market because right now, there are 5 critical questions that could determine whether you make or miss serious money in this precious metal. We are talking about a market that's experiencing a historical short squeeze, supply deficits that have analysts predicting $100 per ounce, and industrial demand that's absolutely exploding. By the end of this video, you'll know exactly what's driving this rally, whether you should jump in, and the smartest way to invest in silver right now. Let's get into it. First, let's talk about what actually is happening. Silver started in 2025 at around $29 per ounce. Fast forward in October, we're sitting at just over $52 per ounce. That's over 76% gain in less than 1 year. To put this in perspective, while gold hit an all-time high with 50% year-to-date ratio, silver has absolutely crushed it with a 76% gain. And here's the kicker. Major analysts are saying this just might be the beginning. Bank of America just raised their 2026 forecast to $65 per ounce. Some analysts are even talking about $100 or $150 within 3 to 5 years. That's potentially doubling your investment, and exactly why everyone's paying attention to silver right now. So let's tackle the first question everyone's asking. Can silver really hit $100 per ounce? Here's what we know. Silver just broke the psychological $50 barrier, which is a level that held for decades. When a commodity breaks through a major resistance like that, it often signals the start of a new bull market, not the end. But let's look at the fundamentals. Bank of America's $65 forecast isn't just a speculation. It's based on hard data. The market has experienced 7 consecutive years of global supply deficits. 7 years. That means the demand has exceeded supply for 7 straight years, and that cumulative shortage is going to intensify the price to go upwards. Some experts are even more bullish. They're predicting about $100 to $150 within 3 to 5 years. Because these supply deficits aren't going away, they're only getting worse. The Silver Institution confirms that this deficit is going to continue in 2025 into 2026, with estimates ranging from 100 million to 200 million ounces short. Now, could it happen? Absolutely. Is it guaranteed? Well, nothing is guaranteed in investing, but the fundamental case is for significant higher prices stronger than it's been in years. Question number 2. Is this a speculative bubble that's going to crash? Or is it genuine structural bull market? This is critical because it determines whether you should be buying or running for the exits. And honestly, the evidence points strongly towards a structural bull market. And let me explain why. First, this isn't just a momentum trading. The rally is underpinned by real physical supply constraints. We are seeing a historic short squeeze in London with lease rates exceeding 30%. That's insane. Lease rates that's highly indicative of critical low inventories and genuine shortages, and not just speculation. Secondly, industrial demand now accounts for 59% of silver usage. This isn't jewelry or investment coins. This is like solar panels, electrical vehicles, and consumer electronics that's absolutely needing silver to function. Each EV that produces requires 25 to 50 grams of silver, and EV adoption is accelerating globally. Solar panel production is also projected to grow about 32% in 2025 alone. Thirdly, this is the key difference between a bubble. Supply can't easily increase to meet the demand. And here's why. Over 70% of silver comes from as a byproduct on base metal mining. So even though silver prices are up 76%, miners can't just make more silver. without also mining copper, zinc, or lead. This price inelastically creates a supply constraint that doesn't exist in most other commodities. So while there will certainly be pullbacks and volatility along the way, the fundamental case suggests that this is a structural bull market driven by real supply-demand imbalances, not just some speculative excess. Should you buy silver over gold right now? Well, this is where things get interesting because both metals are performing well, but they have very different risk profiles. The case for silver is compelling. At $52 per ounce versus gold's $2,700 plus per ounce, silver is significantly more accessible for beginner investors. You can start building a position with just a few $100s instead of a few thousand. Silver also has massively outperformed gold in this year, 76% increase versus 50%. And historically, when a precious metal bull market really gets going, silver tends to outperform gold on a percentage basis because of its lower price and higher volatility. But here, this gets important. Analysts warn that silver carries a higher volatility and hidden risk compared to gold silver profile. When a market gets choppy, silver falls harder than gold. During the 2020 COVID crash, silver dropped more than 30% in a matter of weeks before recovering. So here's my take. If you're looking for wealth preservation and safety, gold is still the king. But if you're looking for potentially higher returns and can stomach the volatility, then silver offers more upside. The smart move, most experts recommend holding both. With gold as your foundation, maybe 70 to 80% of your precious metal allocation, silver should be around 20 to 30%. Now comes the fourth question. How will industrial demand affect silver prices going forward? This is absolutely crucial because it's the fundamental driver that makes silver different from gold. Gold is primarily the monetary metal and store of value, while silver is both a monetary metal and an industrial commodity. And that industrial component is exploding right now. The numbers are staggering. Industrial applications account for 59% of silver usage, up from just 30% 2 decades ago. And this isn't slowing down. Solar panel consumes over 130 million ounces on silver annually, and with solar productions projected to grow 32%, that demand is accelerating. And every solar panel requires that silver for the conductive properties, and there's no current economical substitute. Electric vehicles are also another massive driver, with each EV using 25 to 50 grams of silver in the electrical systems, and the global EV sales is growing at double-digit rates. Then you also have the 5G infrastructure, AI data centers, and consumer electronics. All those require silver. But here's the risk. If we hit the recession, industrial demand could temporarily drop, putting pressure on prices. However, unlike previous cycles, the green energy transition is being driven by government policies and climate goals. That makes this industrial demand more resilient than traditional cyclical demand. The bottom line, industrial demand is the fundamental reason analysts are so bullish on silver long term. The world needs more silver for energy transition, and the supply isn't keeping up. Question number 5. Is there really a physical silver shortage, or is it just a hype? Well, let's cut into the noise with facts. Yes, there is a silver shortage, and it's getting worse. The market has faced supply deficits for 7 years, and that's not just a short-term blip. It's a structural imbalance. Alright, now you're convinced that silver has potential, but how do you actually invest in it? There are several options, each with pros and cons. Option 1. Physical silver. That means you're buying coins, bars, or rounds. The most popular options are American Silver Eagles or Canadian Silver Maple Leafs for coins, and various sizes of silver bars. The pros is you own it outright. In a true crisis, you have tangible wealth, not counterparty risk. But cons is you pay premium above spot prices, which is usually 10 to 30% for coins, and you need a secure storage. And it's less liquid than paper silver, which you can't sell instantly at market hours. And that is best for long-term holders who want physical wealth and insurance that doesn't mind storage concerns. Option 2, silver ETFs. The most popular is iShares Silver Trust, which is the symbol SLV, which holds physical silver in vaults. You buy shares like stocks. The pros is it is extremely liquid. You can buy and sell during market hours, and there's no shortage concern. Lower transactional costs and easy to trade in your brokerage account. And cons is you don't actually own the silver. You own the shares of the trust. Annual management fees, which is typically 0.3 to 0.5%. In a major crisis, you can't take physical delivery unless you're an authorized participant with 50,000 shares or more, which is best for active traders and investors who want silver exposure without physical possession hassles. Option 3, silver mining stocks. Companies like Pan American Silver or First Majestic Silver that mines silver. Pros is leverage exposure. Mining stocks often move 2 to 3 times the percentage more than the silver itself. Potential dividends as well. But cons is company-specific risk. Management matters, higher volatility, and these stocks can fall even when silver rises if a company has operational issues. Which is, this one is best for aggressive investors who want amplified gains and can handle amplified risk. My recommendation, for most investors, a combination approach works best. Core position in physical silver for wealth insurance, an ETF for liquidity, and a small portion in quality mining stocks for leverage. Start with recognized coins like Silver Eagles or bars from a reputable dealer with transparent pricing. Compare premiums before buying, and whatever you do, only work with established, reputable dealers. There are scams out there. Don't ignore the risk. Before you rush out and buy silver, let's talk about the risk because they're real. Silver is significantly more volatile than gold. In 2020, we saw a 30% swing in weeks. If you can't handle watching your investment drop 20 to 30% temporarily, then silver might not be for you. Silver has an inverse correlation with US dollars. If the dollar strengthens significantly, silver typically falls. And if you buy physical, make sure you have a storage box, home safe, or private vaults, and they all have costs and considerations. And when you buy physical, you pay for the spot price, and when you sell, you might not recoup the premiums. The key position is sizing. Precious metal experts typically recommend no more than 5 to 15% of your total investment portfolio in precious metals, with silver being a portion of that. Never invest money you might need in the next 1 to 2 years because of volatility. So here's the bottom line. Silver is experiencing a historical moment driven by genuine supply deficits, explosive industrial demands, and a perfect storm of factors that have analysts predicting significantly higher prices. But can it hit $100? The fundamental case is going strong. Is this a bubble? Evidence suggests that it is a structural bull market, not speculation. Should you choose silver over gold? Well, both have their places. And will the industrial demand drive prices? The green energy transition suggests yes. Is there really a shortage? Absolutely. And that is documented and worsening. But remember, no investment is without risk. Do your own research and understand your risk tolerance, and never invest more than what you can afford to lose. If you found this video helpful, hit the like button and subscribe for investment analysis. Drop a comment below. Are you bullish or bearish on silver? And if you want to learn more about investment opportunities, check the other videos that I'll be linking below. Thanks for watching, and I'll see you in the next one.